All right, I want to do a follow-up here on Bitcoin, and I want to remind those who've listened to previous videos or some newcomers that haven't heard any of the Bitcoin stuff, is that this market had a very interesting and very dynamic move lower to support. And when markets basically trend, it's a trending swing. It's not a trending market lower. It's a swing that's trending lower. And it does a big move like this, and it comes to support. That's a reversal for me. It's a support area, and the market's trading to the swings. And my relationship in this is that the market did this. That's a swing higher. And it finally goes lower here. It actually comes back to where it started over here. So this is more like a support area. And while this is a trending swing, the market is basically ranging. And then I would characterize it by range boxes and other things, but we've already talked about that. And the important thing is we saw the dynamics of this that were so bearish like this, but what is important is the reversal. And you should be getting in here in a buying tail when most people won't get in, and that's how I show the markets. When markets look like this, I look for buyers. And what I don't know, and what happens on the same bar, is the market closes here. Now, you'd have to look at it in more detail on an intraday chart, but the gist of it is the market had a big move lower like this. These are breakout sellers, and they got their butts kicked on this. This is a very large number of dollars for a range like this by the time the day is over. It starts here, it goes to here, and it closes here. And that distance that from the bottom to the top, where it went from the low to the top, is so obvious. Look at the range of that just to get to the close, that some people will think it's a very strong impulse higher, and some people may call it a spike. It's a behavior in the market that is so compelling to professional traders that they will tend to want to go long in that market. But because of the risk, which is the distance from where it closed to the bottom, that's a big risk. That's mega dollars. What they'll do, instead of trading large numbers of contracts, they'll get in because they don't want to miss the opportunity. In their mind, this is such an important move. It's going higher before it makes a new low. It's that important of a move. And the number that you hear is they think that it could double. So I copied it here, and I just put it on top of here, but I moved it to the right, so maybe it could close the gap. Now, this is a generalization of a gap. I'm sorry, of a spike. Not everybody sees a spike, and if they do, they don't trade it the same way. I'm just telling you a scenario that I learned about from a guy called Al Brooks. It was a change in my gestalt, how I looked at behaviors of markets. And so it's an important reversal. And so what happened was, what we were doing is saying that we could only have one contract, let's say, and then we could scale in and out. And then I went through the various scenarios, how you could make money by scaling in and out. Now, in the meantime, it has a swing, lower lows and lower highs, until it tapered out here, and actually it's at a support area if you look at range boxes, but you can't tell that it's going higher. And the whole gist of this was, for me, I'm not entering into markets here. I'm here. If I get into the market and I'm a one contract trader and it goes to here and I don't take my profits, I have to get ready for a drawdown. But if I believe the market is going to double this spike and the markets start doing things like this, what this is to me, these are the traders who are so impressed with the impulse here. They're getting in after the close on other days. Actually, it went a little bit higher the next day, and then the market's been trying to retest the high, but it just continues moving lower. These are 1, 3, 5 patterns. 1, 2, 3, 4. So if you sell here, because the market's starting to go lower with a stop here, it went lower. And so you can trade those patterns and you can scale in and out. And so if you look at this and you tell at somebody else's chart and they say, without drawing lines here, that, you know, I got in here, you might think, man, they are losing a boatload of money. But professional traders who have the ability to trade with larger contracts and know how to manage it and how much to add. And when you add a contract, that's adding risk. But when they know the dynamics of the market, they actually, if they got long here and basically traded and scaled these corrections here, you and I, if we had one contract, would be losing money. But they would be making all kinds of money as buyers here if they know how to trade these patterns. So they're not losing a penny here. They're actually ahead in the market. And yet the market had this spike for just a short period of time. The next day it went a little bit higher. And if they scale in and out, they're making money you don't see. You have no idea how they're making money. And the thing is, these moves are volatile. These are very large prices up and down. It's if you actually do the math of it, it's not like a market that's ranging like this. These are very profitable swings, not as volatile as it gets, but it's very tradable. And so what's happening now is the market looked flat. It looked like it was losing that volatility, that momentum. And on this chart, which is a daily chart, this thing almost moved not at all for the better part of a week until the market opened here and it went higher. And so this, what's probably going to happen here is that the market uh, uh, it's going to go higher. Now remember, after the market started doing this and correcting, I was telling you, these are the late buyers. When they get in here, eventually the market will try to take them out. For me, if I get in, I just take a drawdown. But for the trader who's getting in here or getting in here, if they don't take profits, they start losing money. And so the market will run their stops. Buyers are too late here if uh, if they have small stops because they're not likely to trade with this kind of a stop. But a professional can manage this, make money on these swings, and end up making money on these moves. They could sell it. They could go long when the market goes here. They could sell a contract. They could buy here, or they could just sell. They could just buy here, they let it go higher, and then they buy when it goes lower, they buy here. There are many ways to make money in this. These are very, if you traded every swing here, you'd have profits up to here somewhere, and the market's been going lower. It's not hard to trade this, but you have to know how to trade it. And you have to know what your priorities are. If your priorities are, this is so important, it's going to get there, well, you do it by trading um, scaling in and out and taking some of your profits off the table in case the market starts trading lower. But the probability is this market, in my mind, because of the dynamics of this, whether you call it a spike or not, this market is going to fail to make a new low. And when it's done doing this kind of stuff, the market is actually going to go higher. So I think this is the beginning of the market going higher. It hasn't broken out, but I think what you'll find in this market is that it has found its support. It doesn't mean it is going to shoot like crazy going higher, but to me, this is a tell that this is a support area. It did correct. It made it tough for traders who were long late into this market, but that basically this impulse is so important. If this is the bottom, the market is going to do something more akin to, oops, we don't want that. It's going to do something more akin. What is this? Let's get this off. Okay, what have we done here? Get that off. Why can't I get it off? It's going to do something akin to this. All right, Scott, plug this in here. This is our bottom. This is the top. I'm going to take this as where the market's going to find support, and we can look for this market at this time to start pushing higher. You have sellers here. You have to watch the way the sellers take this, because really, for sellers, they'll see this as a 1, 2, 3, 4, 5 count reversal pattern. There will be sellers here trying to sell this market with a stop above here or here. So now what you want to look for, you expect sellers to try to sell it lower, but if you think this is a reversal, they're going to fail to take it lower than here. And in that case, what will happen is you'll see the market just not being able to make a new low. Maybe you'll see some accumulation, and that's when it gives you a sense that, yep, this is the support and the market's going higher. So this happened a while ago, and it wasn't easy. Actually, it's a lot of money if you scale in and out. It's a whole boatload of money. If you traded one contract like this and scaled in and out with one contract at a time, so you have either 2 or 3 and then you scale in and out, this is very, very profitable. I think I showed you this, how it could have worked if you're that type of trader. If you're a long-term trader and you're long here and you're not losing money, you're just taking a drawdown and you're so convinced this is that important that the market won't the market won't go lower and take this out. Well, you're long. You have unrealized drawdown. You're not losing money if you're long here. The trader that's getting in here is not trading spikes. You're trading double bottoms. That's how I want to trade. But if I recognize the strength of this, maybe I'll have more staying power. It doesn't matter to me. And again, this is a lot of dollars. It doesn't matter to me if I get in here and I have a drawdown and my target really is up here. I just have to live through this. And so I'm a longer term trader with a great entry and an understanding that the market has a higher probability in my mind because of the strength of this support to actually fail making new lows, and it's going to go higher. And this is when it's happening. And I might be wrong. Remember, you haven't broken this yet. You haven't broken this trend. If you want to draw a trend line like this, you would draw from this pivot to this one. This so far is a breakout failure. You would expect that, and you would expect that sellers might try to sell this, but I believe you're going to find that this will end up being a pretty good support. And if I'm not, what would I do if the market actually follows this pattern, and this is a 135 pattern short, and it goes lower? Well, I'm not right, but technically not happy about the drawdown in my account because I was in here somewhere, and now it gets even a little bit closer. That's life, but what I would do, whether I decide to take profits and run or have some staying power, I would draw an extension here, and I would look at the market as it moves lower. And this is where it had a, how would I do this? I would either do it here or here. I would do it here. No, I would do it here. If the market doesn't go higher, if this doesn't go higher and it trades lower, I would see how the market breaks the bottom here. This would be another bear flag if it goes lower, right? Market goes higher, but it makes a new low. Did it with all of these things. So if the market gets to here, I'm getting pretty close to my entry, and I have to decide if they're going to make it a little bit more of a challenge, and maybe this will finally be the reversal area. In the meantime, if you're scaling in and out of this thing because you're not trading one contract, and if the market, if you added a contract here to support, and you sell it here, but you have a remaining contract, you're covering yourself with all of these buys, buy here, buy here, buy here. These are Fibonacci extensions. If you're really facile, you can short it. I don't know. You can short it here. The problem with it is I'm long here, so I don't know. It cancels one out. I don't know. I don't know how. I do know how to do that. You trade the patterns here, and so if I bought here and the market got me to here, and I did nothing, but then the market gets to here. Well, then I sell out of my contract, and then short. So you can trade at both sides of it. You can't be an everything trader. You're a trader that's taking a position and you can work with it. Lots of opportunity. It's not really a buy and hold market unless you get here and you're trading to go higher. This will become much more difficult the lower the market gets. But if it gets to here, it still hasn't made a new low, a low below here. It made a new low on the swing. The market is likely going to go higher. That's my point. And there are different ways to handle it. So we'll watch and we'll see, and we'll be able to read it. And if it goes lower, because even though I think it's going higher, I can read it and I can make a trade decision in it. And not everything that I read is correct. The patterns are correct, but the way they work out, I can't tell. So I believe this will be the reversal. If it goes lower, I would be looking for buyers. And when it goes lower, I have to look at it and make a decision. If it goes, when I say if it goes lower, that's assuming it doesn't go higher here. Every time things change, you redraw, you reframe the chart. So I spent a lot of time on this. I think this is going to be the reversal. And if that's the case, I don't want you to forget about a spike and that markets do this kind of thing. They do it all the time. And then they can work themselves into an ABCD pattern. ABC, this is the D. And if it goes lower, I have to adjust this pattern. We've been adjusting this pattern as it goes lower. You could do an ABCD from here, and then the market goes lower. So you have to readjust the tool. But it's your priorities and how you think the market will change the way the market will look to you. You see what you know to look for. And so they say trade what you see. I would say a professional trader and a trader that understands scaling sees differently what this market is and can make money in ways that a market who can't see these details, they can't see it. They're you know they're focused on a trade at a trade location. If that's what they took, if they took a trade here, this is very threatening, and there's a sense and a feeling of a loss of control. And yet, if you can take advantage about some of the subtle things that go on, it becomes a different experience. And if in the meantime, you're knocking out a couple of trades with corrections and take one contract off, you're a net profitable trader, even though the only thing you've been doing is buying. And so you need to think of that or not think of it, but this is an important aspect that you don't want to overlook in the market. We're out of time, and I think we'll just call it quits on this one.